and welcome to NDTV Profit. You're watching IPO and the company in focus today is Concord Enviro Systems. It's a company which is coming out with an IPO on December 19th. The IPO closes on December 23rd. Price between 665 to 701 per share. It has a fresh issue component of 175 crores and OFS of 325.33 crores. The total size of the IPO, little over 500 crores. And joining me today is Prayas Goyal, who is the CMD of the company, and Prerak Goyal, who is the ED of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Prayas, take us through your business first before we go into the financials.
Yes, thanks for having us today, Rohit. So the Concord Enviro as a company is into industrial wastewater reuse and zero liquid discharge. So we essentially deal with the industrial section of water and wastewater, where we help industry to convert their wastewater into a reusable source of fresh water. We apply our proprietary technology such as membranes, waste heat evaporators to provide our clients with a kind of a techno-economic, technology-driven solution to be able to achieve zero liquid discharge.
And what are the kind of clients that you have here?
So our solutions kind of are focused across sectors and geographies in India and overseas. Close to about 40% of our business comes from overseas, and 60% is within India. And our solutions are across geographies, across industrial sectors, from automobiles to pharma chemicals to food and beverage to textiles, electroplating, and we have clients such as Diageo Spirits. We have leading players in their sectors in pharmaceuticals, in chemicals, in textiles, and in automotive.
Prerak, can you take us through the fresh issue component, 175 crores? What are you using that for?
So the fresh issue is going to be used towards the growth objects of the company. I think, if you break it down, we're looking at about repayment of 50 crores of debt, basically to leverage better and also strengthen the balance sheet. There is a working capital component of 20 crores. We will be employing about 38 crores into CapEx objectives. This is both for expanding our waste heat evaporator manufacturing as well as, partially towards the membrane business, also investing that money for debottlenecking our existing facilities. Then there is a outlay that we've maintained for technology investments. That's about 23 crores. And we have a pay-per-use business which kind of supplies our solutions to clients where they don't invest in it. We set up the entire plant and charge them on a pay-per-use model. So about 10 crores for that business. The balance will be CPF net of the expenses.
Give me a sense of the facilities that you have, because my understanding is that you have facilities in Vasai and Sharjah. What is the kind of work they do and what are the clients they cater to?
So our facility in Vasai is our main manufacturing facility. It's the main assembly unit of the company. So it caters to all our Indian clients, and it also does part of the manufacturing for our overseas businesses. The Sharjah facility is a facility which caters primarily to our export market. But it also does a lot of the membrane manufacturing that we are into in the Sharjah facility. So all our, the modules for the systems that we deploy would be developed in Sharjah.
Okay. You spoke about the fact that you're going to use some of the proceeds to pay off debt. What is the total debt that's there on your balance sheet today?
So today we have a total of about 150 crores and about 25 crores of term loans and 25 crores of working capital limits is what we are looking to repay.
And what will it come down to post this payment?
So it should be down to 100 crores.
Okay, and that's a comfortable level for your company?
Yeah, at that level, I think the leverage is good. It gives us room for future expansion, as well as it strengthens the balance sheet as well.
Prayas, you have a pretty lumpy revenue stream, because Q1 is the most lean quarter for you and Q4 is the most heavy quarter for you in terms of revenue recognition. How do you plan to normalize this now that you will be coming to the markets?
Yes, so there is a little bit of Q4 heaviness in our business traditionally, but we are looking to normalize this with the diversification across geographies. So with different geographies coming in, especially on the export side, we do see that they should normalize to some extent. Some of the new product portfolios that we're adding in will also come in. CBG is a new initiative that we're taking. So with these coming in, we do expect a bit of normalization on the kind of quarterly.
What is the kind of order book that you're sitting on, and if you can break it up over how many quarters you have to supply this order, and including the new business segment which you spoke about, the CBG.
Yeah. So currently we have an order book of about 501 crores. This excludes the CBG business. In CBG, we have two contracts which are about 68, 70 crores is the total value there. We have out of the 500 crores that we are considering, we don't counter the CBG at the moment. And this 500 is made up of after sales of about 116 and new fresh equipment and project sales of about 370. So the 370 is what we look to be executing over the next 12 months. We've got both a mix of international and domestic orders in that. I think international is close to about 40%, and the balance is domestic.
There has been a reduction in the third-party sales from customers in China and Germany for you. Can you give us a clarification on how this has impacted, because it has led to your lower capacity utilization as well when it happened. So how have you overcome that, and how did you overcome that?
We have a strategy of selling our systems and plants in different geographies. Obviously, in certain markets where system sales are probably last mile system sales get more done through partners. We have always kind of looked at partners who bought the main technology input from us and then kind of deployed it using their own system capabilities. So that kind of continues. We have different geographies in which way we work, some places where we supply the systems. So there is a little bit of geographical movement, but I think we continue to focus on areas where we see large markets, and Mexico, for example, is currently one of them. The current focus of the government is on wastewater recycling. So, we're kind of looking at that market and expanding there. So it's always going to, keep moving with shift in geographies and depending on where the business really drivers are really coming from.
So what is the kind of dependence that you have in China?
At the current moment, not really. So, if you look at the entire growth that the company's delivered over the last 3 years, China has not been there in that. So it was a pre-COVID business that we were looking at. And in fact, during COVID, it did kind of slow down.
Okay. Can you also take me through your Mexico business as well? Because that's a profitable one. I think now it's profitable, if I'm not wrong. And do you have a facility coming up in Mexico? How is it? Is it an assembly facility, or you directly export to Mexico?
So we're exporting everything from our facilities in India and Sharjah. The Mexico entity is going to be looking at more like last mile, execution of work. So like the operation and maintenance contracts that we'll be signing with our customers there, post delivery of the equipment, that will be done by the local entity. At the current moment, we have a project that we're executing for Diageo, which is setting up a greenfield tequila wastewater zero liquid discharge project. And since that was an EPC turnkey project, the local entity kind of did the last mile supply, so the civils and the installation and commissioning was done by this entity. But as the project is coming to an end, it will be the entity that will then start to do the local operation and maintenance for the clients. And obviously, I mean, as I said, Mexico is a big market, so we're focusing on other companies there who we can expand business with.
Interesting. Can you also take us through the working capital days, because it's coming at 130 days for you in the first 5 months of the year. It was around 154 at the end of FY24, but is that the normal level of working capital days that you carry?
So I think our average working capital days have been in the range of 150. We've brought it down to about 130 as of this year. So the focus there is, we are a backward integrated company, right? I don't buy systems from third parties and integrate it into a solution. I actually manufacture it. So a lot of that from our own membrane development, we have those stocks due to backward integration. Plus 40% of our revenues come from after sales. So, we need stocks to be able to cater to our clients' requirements. And these are all wastewater treatment solutions where if a factory is not able to treat its wastewater, it would kind of have a large impact on their production process. So we have those inventories and that's what drives it. I think on the debtors and the creditors days, I think we are pretty standard across the industry. I think what differentiates us is the stock that we hold and that's purely because of our business model of being backward integrated and the service business.
Prayas, are you looking at a shift to operations and management of these facilities as well?
Yes, we currently are doing a lot of operation and maintenance, which is largely focused on our own installations, and we have in the past, in the current year, really got into operation and maintenance of facilities which are not necessarily installed by us. So, as you know, that the O&M piece is a significantly large portion of the after sales piece is a significantly large portion of our revenue, and we are looking to continue to leverage our kind of expertise and capabilities on that side, that sector.
How big is this opportunity for you, and does it help you in diversification of your revenues as well?
I think the opportunity is significantly large. I don't know if I can put a number to it right now, but for sure it will help us in kind of normalizing our quarterly numbers, as well as going into, let's say, operation and maintenance of kind of a non-direct client segment.
What kind of exposure do you have to government schemes and plans, urban development plans? Because many of these equipment will be used, can be used for water and waste management in urban cities. So, are you participating actively in these schemes as well, or tenders?
No, not at the moment, sir. Our business is kind of away from the municipal or the government part of the water treatment or sewage treatment kind of plants. We're kind of strongly focused on industrial wastewater treatment and zero liquid discharge, which is more kind of private companies. And in addition to that, we do have some business with the defense, mainly for the offshore desalination piece.
Okay, and any reason why you don't want to bid for some of these government projects, which are large and in value terms?
Yeah, I would say there's not specifically a reason why we would not want to do it, but our technology kind of is core focused on reuse. We do see that in the future, there could be reuse on the municipal side, which will come in, but currently it's more treatment for disposal.
Mm-hmm. How big is this market from a growth point of view? And as you see going into the next year, is there specific areas that you want to diversify? You spoke about compressed biogas as one of the segments, but how big is it in terms of opportunity and revenue for you?
Yeah, so compressed biogas is significantly important for our future growth, but we're focusing more on other geographies like Mexico, Europe. We do see increasing sales from those areas, and as well as kind of diversifying into zero liquid discharge for different sectors, such as the paper industry, which is a huge water consumer today, and we have to bring a sustainable kind of solution to help that industry in recycling water and reducing its footprint.
Prayas and Prerak, thank you very much for joining us today on NDTV Profit. Your IPO is opening on December 19th, closes on December 23rd, price between 665 to 701. The total size of the IPO is 500.3 crores, which includes a fresh issue of 175 crores. And your company will be valued at around 1451 crores at the upper end of the price band. Thank you for joining us on IPO Adla.
Thank you very much. Thank you.